Hello and welcome to Gradient's weekly roundup of key economic and business developments in Sri Lanka for the week ending 21st October 2022. Here are the top stories for this week. Japan to organize Sri Lanka creditor meeting. 2023 Appropriation Bill in Parliament. Global players to enter fuel market. Sri Lanka gets credit line from Russia. We will also briefly look at other notable news and wrap up with a capital markets update. In our main story this week, according to media reports, Japan is working to organize a meeting among Sri Lanka's creditors by the end of this year. The newspaper reports that the meeting will discuss issues such as finding ways to reduce debt payments and postpone repayment in the hope of solving the country's debt crisis. It also aims to curb China's influence by helping Sri Lanka cope with what is called debt traps from Chinese infrastructure and project loans. This follows President Ranil Wickremesinghe's visit to Japan in September, where he requested for such a meeting to be organized, with Japan playing a key role. On Tuesday, the government's spending plans for 2023, known as the Appropriation Bill, was presented in Parliament for its first reading. Recurring General Services expenditure is set to rise to 4.6 trillion rupees, whilst 3.2 trillion is allocated for capital expenditure. The largest allocation is to the Ministry of Public Administration with 856 billion rupees, of which 353 billion is for pensions. Ministry of Finance is to receive 613 billion rupees, which includes 338 billion in capital expenditure. 410 billion rupees has been allocated for defense, whilst health services budget is 322 billion and education is still low at 232 billion rupees. On Tuesday, the Sri Lankan Parliament endorsed an amendment to the petroleum law, allowing global suppliers to import, supply and distribute fuel in the country. This is currently only allowed to the Ceylon Petroleum Corporation and the Lanka Indian Oil Company. CPC employees protested against the new amendment by going on sick leave, noting that attempts were being made to sell the state assets to foreign firms, despite the corporation making profits in July and August. Losses at the CPC grew to over 600 billion rupees from subsidies and dues from the state enterprises, such as the Ceylon Electricity Board. The Embassy of Sri Lanka in Moscow announced a discussion with the Russian government on the possibility of obtaining a long-term fuel credit to Sri Lanka. According to the Financial Times, cash-strapped countries are taking advantage of price discounts created by Western sanctions on Moscow. It cites data research from Kepler in stating that this is the first time Sri Lanka has imported Russian oil since at least 2013. Sri Lanka joins India, China, Pakistan, Bangladesh and Cuba in purchasing Russian oil in recent times, which trades at about a $30 discount on average. According to the SLTDA, tourist arrivals during the first half of October were 20,573. This brings year-to-date travelers to Sri Lanka to over 545,000. India was the largest source market, followed by Russia and the UK. Restarting Aeroflot flights to the island nation should see an increase of Russian tourists, helping to drive towards the annual arrival target of 800,000. And now let's take a look at the weekly movement of the All-Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities were unchanged. Of the 109 billion rupees worth of bids, only 16 billion rupees were accepted. And here's how the rupee performed against the dollar this week. And that's a wrap for this week. Subscribe to our YouTube channel at the link below for more updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.